Good morning. It's time for Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me is Sonal Bhutra. Sonal, good morning. The tariff deadline looming, but before that, festive greetings to you. Festive greetings to all of our viewers as well. And the bulls would be hoping that Lord Ganesha could, as they call it, Vignaharta. So you'd hope that their pains are alleviated for sure, at least for today's session, definitely.
Oh, yes. But, if we talk about the markets, let's get to that because yesterday we did see those gains come by 100 points in the Nifty, but all of it, they have been pared down today. So 170-point cut on the Nifty is what we are witnessing right now. It is at the 24,800 mark. 25,000 continues to be that important level which has been resisted so far. If we talk about mid-caps, that's the one that's underperforming, 1% lower on that one. Bank Nifty too not supporting the index today. So that's where we are seeing a lot of cuts as well. Across the board, be it Nifty Realty, be it Nifty Pharma, be it Small Cap Index, all these indices are lower in trade as we speak. In fact, all the sectoral indices, barring FMCG, are in the red currently. There was a little bit of recovery from the lows on the Nifty as well, but it's important to be seen whether this continues or not. Tomorrow is a trading holiday and the tariffs kick in as well from tomorrow. The expectation was maybe there could be some more negotiations and this would be a different rate, but that's clearly not something that's happening. So the entire market, which was in wait-and-watch mode, reacting to this news of these tariffs coming into being from tomorrow. But we are talking about markets right now. We have to talk about individual names as well. Hormuz has gone across to that big wall and we'll be talking about all the top movers in the market right now. Hormuz, tell us more.
Some obvious names here and some not so. And Protean EGOV, of course, the news-driven move that we are seeing in today's session, of course, after that win from the UIDAI. Now, the volumes today, now 3 of the most traded volume days on record for this stock have taken place since May. So in the last 4 months, we've seen 3 of the most heavy volume traded days for Protean. And even in today's session, almost 80 lakh shares of the company have already changed hands in today's session compared to a 20-day average of just close to 2 lakh shares. And this is almost well over 80% of last Thursday's volumes, which was around 95 lakh shares, is when the stock was up 15% in last Thursday's session. So 81% of last Thursday's volumes already done in the first 2 hours of the trading session. On the downside, of course, there is Vodafone Idea down 10%. It has already given up half of the 6-day move that it had seen when the stock had gained 20% in the last 6 sessions before today. And today the stock is down 10%. And today's volumes were 60 crore shares have already changed hands compared to a 20-day average of 11.6 crore. Remember, the last 2 sessions, the stock had already had 100 crore shares each trading in the last 2 sessions. And with this fall, the stock has already declined below its 50 and its 100-day moving average. A stock that is bucking the trend in the broader markets today is SH Kelkar, and among the top gainers in the broader markets today, 8.5% higher on the stock, the biggest single-day gain that the stock has seen since the month of May. And this stock has also gained in 5 out of the last 6 sessions, and it needs to move above the level of 246 in order to turn positive on a year-to-date basis, and that is SH Kelkar for you. And the last on the list, of course, is another obvious name, JK Paper, and seeing some profit booking today after it saw the biggest single day gain on record yesterday with that 18% up move. And in today's volumes as well, almost 20 lakh shares have already changed hands compared to its 20-day average of around 4 lakh shares. So even today, volumes are on the higher side. There is some profit booking taking place. But over the last 3 years, the stock has done precious little. From the end of 2023 till date, the returns for the stock are a negative 3.5%. So there are some movers, obvious ones on the upside, and there are some that are seeing some profit booking in today's session.
All right, that's an interesting list. And you spoke about JK Paper. That stock was buzzing. The entire paper sector was buzzing, in fact, yesterday. We'll speak to the management as well later in the day, but also get a sense of the industry as well. They were on a roll yesterday. Government tightened import conditions for certain paper and paperboard products. To discuss the impact and understand the development, we are now joined by Naveen Kumar, who's the Associate Associate Director, CareEdge Ratings, joining us now. Mr. Kumar, good morning. Thank you so much for joining in. Well, government has tightened import conditions for import of certain types of papers. There are concerns as well that some of these are sold below cost as well in the industry, and it is impacting the domestic industry. First up, if you can tell us which kind of papers are covered under this, and what kind of imports were we seeing so far? Is it that big that it would actually threaten the domestic industry?
Yeah. Thank you. See, first of all, I just thought of, presenting a little bit of, industry market on how actually the dynamics works out here. About 55% of the entire market comprises of the paper board. And this is a segment where actually the government has imposed a minimum import duty, minimum import actually price. So what we see is that the last 2 years of trend I'm just explaining to you, the net sales realization for this paper board has come down from 79,500 rupees per metric ton to 66,300 rupees per metric ton. And in the Q1, if we see, it has come down further to 64,000 rupees per metric ton for the domestic market, for the domestic players. So whereas the one which we are seeing of the imports, it is further lower than that. So what is happening is that on the one side, actually last year we have seen the significant increase in the wood pulp prices, about 19%. And on the other side, that these realizations are coming, and it has significantly impacted the margins, where we see that the margins of across the industry has come down by about 500 basis points. Now, in order to protect the domestic manufacturers in the paper and the paperboard industry, the government has now introduced the minimum import price, and they marked it at 67,220 rupees. So now the current domestic sales price realization is about 64,000. So this particular gap which is there is actually, about 5% gap is going to get benefited by the domestic players. That is one part. And second part, what we are seeing is that now we are seeing that the wood pulp prices are moderating. The kind of an escalation in the wood price which we have seen in FY25 in the Q1 and in the Q2, it has moderated to a significant extent. So this both of these to a great extent are going to protect the margins of the industry. So overall, what we are going to see is that the margins for the entire industry is expected to grow by about 300 to 350 basis points. And no, this is also one more concerning point which was there behind this minimum import what's the price to be installed by the government is that if you see in FY25 the total imports have increased across various countries by 11%, whereas from China it has increased in terms of the value by 24%, whereas in terms of volume it has grown by 33%. So what we are seeing is that year on year, this imports consistently increasing, and is significantly hurting the margins and also the operating performance of the domestic players. And this move by the government is very much welcomed, and we hope that it is going to give some kind of respite for the domestic paper manufacturers. So especially the board manufacturers are going to get benefited.
So can you share the names of the key players in this segment, particularly this virgin fiber paperboard business, Naveen, and what is their total TAM, if you could address that as well?
I'm extremely sorry. Actually, we actually remain ourselves, quiet when it comes to actually disclosing about the company details. However, we see that now about if we see top 20 players, probably about 10 to 12 players are in the paperboard industry, whereas remaining 8 players are purely into paper. So the paperboard industries or the companies which are in the paperboard, they are going to get benefited, whereas the remaining companies, are going to get some kind of impact. But when we see the moderation in terms of the raw material prices, it is going to benefit them also.
Okay. Just to follow up, Mr. Kumar, you mentioned that 55% of the total paper market is from the paperboard industry. Can you confirm that? So that's
Yes,
a big chunk
correct.
of the market which is going to get a big benefit then.
Correct. Yes.
Okay, all right. If you cannot name the players in the listed space or unlisted space, I just wanted to understand how big of the Indian manufacturers market is, what my colleague asked as well, in the paperboard industry, and what was the volume that we were importing so far? You mentioned China was higher. There was other places as well where we were importing from. If there is a number of how much imports we were doing of paperboard?
Yeah. So total in terms of the value, India was been exporting last year in FY25, India has exported 6,188 crores of the total amount, and out of it, the China itself was contributing 31%.
Naveen, the industry is not out of the woods yet. The first
Yes.
quarter also was nothing to write home about when it comes to the results of these paper companies. But with whatever you have highlighted so far and with these measures announced, do you see that the second half is going to be better? May not be this quarter itself, because we are already almost coming to the end of this one as well. So we are 2/3 of the way in. But maybe from the second half of FY26, do you expect the tide to turn, if not materially, at least a slightly better performance compared to H1?
See, I would like to tell that now Q2 also we are going to see some kind of, uptick in the margins part. Why? Because when we see the wood pulp prices, which are the domestic wood pulp prices, which are there, they have, remain stable. That's one good thing. Second thing is that the imported pulp, which is there, that is, that has now come down by 9%. And whereas, waste paper prices were there, they are also remain like, same, maybe like, 5%, it has increased. So overall, when we see these aspects, so on the other side, the domestic demand is also increasing because we see that growth in the FMCG segment, e-commerce segment, pharmacy and all. So this is going to aid in terms of the volume part. So and this imposition part of the minimum import price is going to aid from the say Q3 onwards. What you said is right, but Q2 also we are going to see some kind of uptick in terms of the margins.
All right, take that point, Mr. Kumar. Thank you so much for joining us and explaining to us the dynamics of the industry overall and how this minimum import price could impact the industry overall. So that's the word coming in from Care Edge. They say the industry will tend to benefit. Prices have fallen sharply, so there could be an improvement in margins. 5% benefit to the pricing overall for the domestic manufacturers right now. We'll slip into a short break. Up next, we'll put focus on the crypto market with Manisha Gupta on the other side.
Corner, powered by Coin DCX.
Welcome back on Crypto Corner. Today we have Mridul Gupta, who's founding partner at Coin DCX. Mridul, hi, thank you so much for joining us. And it's a growing number and a growing market when you look at cryptos. 2 crore plus is what you have on Coin DCX as a platform. How is that number growing? Is this a bull market or is this maturity finally coming here?
I think we are very far away from the bull market and the market's tapping out, Manisha, on this one. We see a lot of early signs of India rising. We see a lot of participation from tier 2, tier 3 cities in India. We see a lot of women participants now coming on the platform. We also see people's age shifting from roughly 25 years to 31 years average age on the platform. So these are all signs of market maturing, but we are still at 2 crore, market is 100 crore. We are still a very, very small portion of the portfolio of people. It's still not reached a place where people are talking about Bitcoin on their chai, right? So I think we are very, very far away from the market maturing. All of this feels like it is a bull market phenomena, but bull market happened a few months back. Market has been very stable after that. Sure. But we're continuing to see the market, the new participants coming into the CoinDCX platform and in the market at an increasing pace.
Mridul, as you mentioned, the overall portfolio of people investing into crypto has changed as well. It's not a retail FOMO anywhere because you have bigger participants, investors, even family houses, institutions coming into this space. Are you looking at a better diversification, one? And is there this whole comparison with equities and gold still continuing?
I think equities and gold comparison is going to happen. We have to live with it because if you look at Indian households, people have really, really invested in gold ever since they were young.
Thousands of years.
Right? And India continues to have that edge as the markets are continuing to rise in the gold ecosystem. Equities has been new and people end up invariably comparing equities to either gold or an FD, and we have not seen that comparison go over in the past 20, 30 years. I don't see that comparison, and it's a healthy comparison. I actually like that comparison because if you look at gold, it's super low risk, and the returns are in proportionate to the risk it carries. It's global. People are bought into a vision of gold being a safe haven. If you look at equities, equities has multiple risks attached to it. It is a country risk, it is the company risk, it is the consumption risk, And because of that, it's slightly higher risk profile, but slightly higher return profile as well. When you look at Bitcoin, the nature is completely different. It's more global, it's scarce. So the thesis is that of digital gold, that over the next 10 to 15 years, the market cap will grow as much as the gold's market cap. And hence, the risk profile changes completely. I think it's a very unique opportunity to participate in an asset class which could be like a gold asset class, but right now it's so infant that it's volatile. So what I urge people typically is that you compare the three asset class, but you don't get into crypto for a short-term view.
Okay.
You get into crypto with a more long-term view after doing all the comparisons, because in a longer-term view, the risk goes away, the returns stay, right? So that's I think the only short line description for this.
Sure. January 2024 is when it all began. Mridul, we saw the ETFs come in, the best ETF launch ever in the global markets when you compare it to traditional asset classes. And then 2025 brought about this whole new surge of real world asset tokenization. Between the two of this, where does India stand?
I think India is, to be really honest, India I think is lagging behind in terms of crypto evolution, adoption and innovation. We have seen a lot of participants coming into crypto, but we have not seen major capital come into crypto yet, or major talent come into crypto yet. Now, if I go back to those two events, 2024 was a big event because ETFs launching, the Bitcoin ETF becoming the single largest, fastest growing ETF, and multiple corporates and multiple financial institutions adopting it. They were all very, very positive signs for Bitcoin in the US, in Europe, in Southeast Asia, which triggered some kind of a mini activity around bull run. We saw the market speaking later then, and with especially Trump winning, the market peaked even more. So if I compare that to what's happening in India, India is looking at it with a slightly, opinionated view. Is it good? Is it bad? That discussion is still going on. While in the rest of the world, the discussions have moved from is it good, is it bad, to what more can it do for me, right? Can it be a store of value? Yes. Can it help me do transaction processing better? Yes. Can it help me build financial markets better? Yes, right? So if we see action in Dubai, where 30% people own some kind of crypto, the market is moving to actual transactions happening in crypto.
Sure.
If we see US, the money markets are being built on crypto. So I think India is slightly lagging behind. We hope India will, leapfrog this and do better. But right now it is slightly lagging behind. When it comes to real world assets though, I think customers are ready, supply is not ready. So customers are ready because we see a huge adoption of stable coins in India. But supply is not ready because there is no compliant or a regulated framework around digitizing real world assets, putting it on chain, and putting the governance right. So I think it's more of an industry problem than the customer problem. India is definitely ready for RWAs.
From for it being legal to trade but not regulated, the markets think that it's a very thin line there. How, as an exchange, or your conversations with regulators or your conversations with associations, how are you really dealing around with it at this point?
That's a good point. I end up telling so many people even now that it's legal.
It's legal, yeah.
But it's not regulated, and there's a difference. And I think the common janta, the common man in India does not understand the technicality. Legal, regulation, all of it is the same thing for him. So,
are we looking at a new regulator for this, by the way? I mean, that's a conversation that also is ongoing.
So I think if you look at crypto, it's a technology, and there hasn't been, and there are multiple implications of the technology. There's a financial implication, there's a trading implication, and then there's an innovation side, new use cases coming up on the implication. So we believe as an industry that existing regulators cannot regulate crypto because it falls outside their, some of the use cases falls outside their regime. So we believe that there will be a cross-coordination body or a cross-coordinated regulator which will have to create the guardrails around the industry. And then depending on the use cases, as the use cases go deeper, maybe it falls under the kitty of an RBI or a SEBI or someone else. But the cross-coordination and the guardrails has to be done by an independent party versus it fitting into the criteria of the existing regulators.
Oh, well, yes. And as somebody mentioned recently, that you can make a rule or a regulation and then keep defining it or redefining it, refining it perhaps as well as we move forward from there. Mridul, as always, thank you so much for coming by into our studios. And that's all the time that we have on this edition of Crypto Corner.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Now, on the second day of his visit to his home state of Gujarat, the Prime Minister Narendra Modi today inaugurates two major projects at the Suzuki Motor Plant in Hansalpur. Now, this includes the inauguration and the flag off of the e-Vitara, which is Suzuki's first global strategic battery electric vehicle. The made in India battery electric vehicles will be exported to more than 100 countries, including advanced markets such as Europe and Japan.
Okay, all right. That's the big update. Of course, we'll keep getting you visuals from that visit. But for now, let's quickly take a look at the markets again. We have seen some recovery from the lows. The Nifty is at 24,814. But yes, it's the mid-cap side of things which are not doing so well. So the advanced decline ratio is in favor of the declines, 1:2. That's the ratio that we are working with currently. Let's talk about some stocks as well, which are in focus. Sai Life Sciences, after that block deal, that stock is down around 5% as we speak. We do have Easy Trip Planners, which is down around 2%. Vodafone Idea on the commentary coming in from the government that there'll be no further support for the company overall. That stock is down around 9%. Remember, the stock was up around 7% yesterday. Day before yesterday as well, we saw a big surge on that name. So that stock is down 10% as we speak. But we do have an important story that we need to talk about. Sources tell CNBC-TV18 that Bajaj Alliance will be meeting Association of Healthcare Providers India tomorrow. There's the issue of revocation of cashless treatment. Yash is joining us with more details on this. Yash?
Well, that's correct. So, of course, the matter still stands, undecided in terms of what's going to be the final outcome. As far as that conversation itself is concerned, AHPI, which is Association of Healthcare Providers India, threatening revocation of cashless facility for customers of Bajaj Allianz Life. They've even written a letter when it comes to care health insurance, warning them on similar lines and taking similar action. But there could be a big breakthrough on this particular matter. What we've been given to understand from our sources is that representatives of Bajaj Allianz General Insurance as well as AHPI are expected to meet tomorrow to discuss the issues which AHPI has highlighted and somewhere try to find a middle ground and resolve those issues so that cashless facility can be introduced again and that revocation could be withdrawn as far as Bajaj Allianz customers are concerned. But there's a flip side to this as well, what we've been given to understand. If the matter does not get resolved in tomorrow's meeting, AHPI is talking about some serious actions which they could take as far as insurance companies itself are concerned. What sources tell us is that AHPI may look to seek CCI, or Competition Commission of India, investigation against general as well as health insurance companies for alleged cartelization. The allegation from AHPI is that insurers, both general and health, are enforcing fixed tariff model, which is a violation of competition rules. They are saying that they're being threatened on delisting from common empanelment and punitive action by the insurance companies which are entering into a cartelization model. They've also sought the insurance regulator IRDA's intervention for putting a punitive action on insurance which enter into a cartel-like behavior and misuse the dominant position. So a lot depends as far as tomorrow's meeting between the two parties is concerned. A resolution could lead to revocation of or withdrawal of that revocation of cashless facility. But if not, there could be more action coming from AHPI is what we've been given to understand from our sources.
Indeed, Yash, thank you for that update. By the way, the recovery continues on the index, now almost 70 plus points higher from the lows of the day of 24,755. We are now at 24,830 on the index and predominantly led by the FMCG names, be it HUL, be it Britannia and be it Maruti as well, which are now moving higher. The FMCG index at the highs of the day, as is HUL and as is Britannia, now almost 3% higher on that stock. Take a short break. On the other side, we put the focus on our big story on the other side. Stay tuned, we'll be right back.
Welcome back. You're still tuned into Trading Hour. Well, the big story today has to be the tariff regime which has kicked in, and they're set to kick in from tomorrow. Let's go across to our colleague Parikshit. He'll get us a quick recap of the development that has taken place. Parikshit?
Well, indeed, a setback for India, so to say. Till now, negotiations were on to avert that 25% additional penalty, and those negotiations are still underway. In fact, all efforts are being made to get a pause on these tariffs. Now, what happens immediately? The US has issued a notification essentially for importers to know that these will be the tariff lines that will be effective from 12:01 a.m. 27th of August, which is 9:30 a.m. India time on Wednesday. So that's when the tariffs kick in. It will be a 50% tariff, that is 25% reciprocal tariff that came into effect on the 1st of August, and also the 25% additional penalty that was announced. So it's a 50% tariff on Indian goods. What does it really impact? Well, $48.2 billion worth of India's merchandise exports to the US will be subject to the 50% tariffs. And many analysts have said that this is almost like a blockade, and this will stop the export of these items to the US. Which sectors will be the most impacted? Textiles, footwear, leather goods, labor-intensive goods exports to the US will be most impacted in the months to come. But a lot of the exporters have already sent a lot of consignments, huge quantities of consignments, anticipating these high tariffs. So possibly they'll have a cushion for the next few months at least. Having said that, goods already subjected to Section 232 tariffs, that is 50% tariffs on steel and aluminium, 25% tariffs on automobiles, that stays, and that is not impacted by the reciprocal or the additional penalty tariff. So that remains as it is at 25%. Then you also have certain exemptions such as iPhones, copper, pharmaceuticals, semiconductors, timber, energy products and minerals. There is no change in tariffs on this, either in the form of reciprocal tariffs or additional penalties. These are products that will continue to be tariffed at the rates that were being tariffed before any kind of reciprocal announcement happened in April this year.
Parikshit, thank you for that update, but also tell us more on the details on what is the latest with regards to the negotiations front, because they were supposed to take place this week. That has not transpired. So what are you picking up on that front?
Yes, the trade negotiators are not coming to India. Those formal talks are not being pursued, but we're given to understand that trade negotiators, officials from across the government are in touch with officials in the White House almost on a daily basis. Efforts are being made to avert this 25% additional penalty and find a way out, have some sort of understanding and deal with the United States. In fact, an important point, in the run-up to August 27 deadline, industry bodies in the US have written to the White House seeking a 90-day pause on this additional tariff so that there is room for negotiation between India and the US. They've also said that US should understand the amount of energy, oil and gas that India is buying from the US, and this is only going to increase further. Having said that, the government here, according to sources, is reiterating that we'll continue to protect interests of our farmers, MSMEs, workers, entrepreneurs, and we'll do whatever it takes to work in national interest. The government will continue to take steps necessary to mitigate the impact on trade through export promotion schemes and also trade diversification measures. The External Affairs Minister has said recently that the arguments used to target India are not being used against China. The External Affairs Minister also said that the US additional tariffs on India are unjustified and unreasonable, and India is sticking to this stand. In fact, the Indian envoy to Russia said that we will buy oil from wherever we get the best price. So this seems to be India's stand. We're told that the government is not looking at retaliation. The effort would be to try and resolve the situation at the earliest, get a reprieve from India, get a pause on these additional penalty tariffs.
All right. Thank you so much for all those details, Parikshit. In fact, let's listen into what Mark Mobius, chairman of Emerging Opportunities Fund, had to say on the US tariffs that come into effect from tomorrow and get his outlook on the Indian markets.
India will be okay, even though it will hurt some industries. For example, pharmaceuticals would be hurt because about 40% of pharmaceuticals exports go to the US. The garment industry, of course, will be hurt because a big portion of their exports go to the US. Jewelry, gems, that sort of thing will be hurt. So those are the three industries I would say which will be most hurt by these tariffs. But overall, we would see maybe 0.5% to 0.75% cut in the growth rate of the Indian economy. In other words, instead of going up by 7 or 6%, we might see 5.8 or 6.1 in terms of economic growth for India. So generally speaking, it's bad for India, but it's not disastrous.
All right, so it'll not be that big an impact that the industry is thinking, but yes, there could be some impact because of that 50% tariffs that has kicked in. To take this discussion forward, we are now joined by Rohit Sadaka, who is the Director, India Ratings and Research, and also Prerna Jhunjhunwala, who is the Vice President, Equity Research at Elara Capital, to understand the sectors which would be impacted by this tariff number that has kicked in from tomorrow. Rohit and Prerna, thank you so much for joining in. Rohit, let me come to you first up. First, was there an expectation that negotiations could yield a lower tariff? And secondly, if not, which are the major sectors which would be impacted? And what kind of demand hit are we already seeing? Or what is the ground reality with some of these sectors when it comes to the demand impact?
Yeah, actually, with this 25% additional tariff, there will be impact on some of the sectors, definitely like gems and jewelry. Textile would be the other sector which will get impacted, because India, if you look at the overall export of textile from India, it would be around 28% of the textile export is to US, which forms a very big market for Indian textile players. So that would be one of the key sectors which will get impacted. And the other competing nation like maybe China, Vietnam, Bangladesh, Sri Lanka, Cambodia, they have a lower tariff. So in that case, India's import would be costly for the US market. So that will have some impact, and overall inflation increase in US can also lead to some slowdown in the orders.
Let's also bring in Prerna into this conversation. Prerna, good morning. Thank you for joining in. You would have spoken to a lot of these corporates that are having exposure to the US markets and their preparation with regards to these tariffs. Now, with 25% already in place, another 25% kicks in as well. We've spoken to the management earlier of companies like Bharat Forge as well, and they had mentioned that at 50% you may as well not be in business, is what Baba Kalyani had mentioned to us. But what are your on-ground channel checks suggesting with regards to what is the feedback that you're hearing from companies with regards to these tariffs and the way to navigate these?
So the companies negotiating with the retailers and the brands to in the form of 20% tariff only. Everyone in the supply chain, including buyers, were hopeful that this additional 25% tax rate would be avoided, and eventually only 25% tariff would remain. But now that additional 25% tariff comes into effect from tomorrow, we foresee that there will be a significant market share loss in the interim till this additional 25% share is revoked by the US, because this is a very high tariff rate for sectors which are not into very high value addition, plus high technology involvement is not there. So it is the cost of switching over to other countries is not very high, and that is the reason that these textiles and garments will definitely face some pressure for volume loss in the near term. To mitigate this risk on an annual basis, the companies were negotiating with buyers to ship higher volumes before this additional 25% tariff is being implemented. So we will see higher volumes going out in Q2 for most of the companies, while the margins would remain under pressure because we have higher tariffs as compared to other competing countries. So negative for companies who are exporting to US and having high exposure to US.
Which are those companies, Prerna? Can you list that for us? Let's get a little stock specific. Which are the names which would be impacted the most and the exposure that they have to the US in percentage terms?
Yeah, so Welspun Living around 60% exposure to US, Indocount around 70% exposure to US, Gokaldas exposed around 70% exposure to US, Pearl Global approximately 60% exposure to US landing products into the US. So these 4 companies at the forefront are having very high exposure to the US. As otherwise also companies exporting to US around 50%. For example, Arvind at 35% exposure to US will be negatively impacted because of either margin pressures that they will have to share with the retailers to maintain business or avoid higher loss of business to other countries.
Okay, all right. Thank you so much to both our guests for joining us today and telling us what the impact could be. Of course, so far the expectation was maybe negotiations could yield a lower tariff rate, but that hasn't come about. So this is what we have in terms of the impact on the different sectors because of that 50% tariff rate coming in from the US on Indian exports. Time for a short break now. We'll get you more on the markets on the other side. Stay tuned.
Welcome back. Still trying to hold on to that 24,800 mark on the index, and the FMCG stocks are the ones that are lending support to it. There was a slightly higher recovery that we saw from 24,830 levels. The index has slightly slipped from those levels, but the FMCG index continues to remain at the highest point of the day. But will this recovery sustain as we go into the second half of the trading session? Sudarshan is here with the latest trends from the F&O space. Sudarshan.
So recovery looks very tough at this point if you go through the data, but overall it's a weak day of trade, and it's mainly because of the US government's notification related to additional tariff that's going to be implemented on India effective August 27, and that will be implemented from 9:30 a.m. on 27th of August, and total tariff on India will increase to 50%. It's a broad-based fall. You take a look at the Nifty Bank, it's down 1%, even IT index is down 1%, and even mid-cap index is down almost on the similar line, and that's the reason even market breadth is still in favor of declines. Ahead of expiry, volatility index has jumped and now it's more than 4%. It's currently around 12.31. Put call ratio, if you take a look, it slipped to 0.78 versus 0.91 that we saw yesterday. So if there is any positive news flow, we might see recovery, but we'll have to see if there is any. Now talking about Nifty Bank, which has been under pressure continuously on a daily basis. Today it has slipped to lowest levels in the last 3 months, and now support for Nifty Bank has fallen to 54,108. And now if we manage to hold on to that levels, then it's fine. But if we slip below that level, the next support comes around 53,483. And resistance remains around 55,396. That is also 100-day moving average. Now coming to the Nifty. Take a look at the call options. I have taken 3 options. 24,800. 24,900, 25,000. All these options have seen a huge option build up, but there's a sharp fall in the premium. For 24,800, premium now stands at 73 versus yesterday's level of 212, 24,900, 34 versus 133, 25,017 versus 73. Now come to the put options. 24,800 premium has risen to 63 from 21, and 24,700 premium to 29 versus 11. So it tells you that recovery looks very tough at this point. Support for Nifty 24,737, resistance 24,970. One stock that I have taken, that is Britannia, that's seeing fresh stocks because we are seeing buying in the FMCG names.
Oh, yes, we are. And that is something which is supporting the markets today as well from the lows. Thank you so much, Sudarshan, for joining us and telling us what's happening in the F&O space. That's about what's happening in the secondary market. But let's put focus on some primary market action. Vikran Engineering's IPO has opened for subscription today. The 772 crore IPO price band is set between 92 to 97 rupees with a fresh issue of 721 crore rupees. We are now joined by Rakesh Markhedkar, who is the chairman and managing director at the company, to make us understand the company's outlook and the business profile as well. Mr. Markhedkar, good morning. Thank you so much for joining us today.
Good morning.
You know, a typical EPC project or a typical EPC company, it has a lot of things: design, civil works, equipment purchase and installation. You have commissioning as well. So in the entire life cycle, where do you stand Do you have vertical integration for raw materials as well? How would it aid margins if you can tell us the entire value chain?
Okay. See, in the EPC, since we are in the three very important segments where the government of India is focusing their investment plan, that is more on the power, transmission line and substations, and we are in the railway infrastructure and water. So right from the design and engineering, so then the purchase, erection, testing, commissioning and contracts management. And the most important is the timeline of the project management. So the Vikran, we are very much focused on each and every element of this complete business cycle of the project management. We have our own design and engineering team. That dependency on outside is almost zero. Then, and coming to that, in 9 years of our operations, not a single project got delayed, and Vikran is known for our execution strength. And that is the probably where we are continuously gaining the respect and response from our customers, repeat orders, etc.
So what is the execution timeline once you take an order?
Execution timeline, that all depends. Somewhere it is 18 months, somewhere it is 24 months. But we keep set target to close that minimum 2 months ahead of the schedule internally.
Mr. Marketkar, welcome. Thank you for joining in as well. You know, most of your order book is of the power EPC space, right? 60% around about.
70%.
70%. So does that remain constant going forward, one? And two, a lot of your listed peers that we speak to, they have called out the fact that there is a shortage of labor and there is a shortage of key skilled workforce, more importantly.
Yeah.
But since you mentioned that you're known for completing projects on time, do you face such a difficulty?
No. Let me give you first of all, though we got our strong technical credential in all the three segments, sub-segments of the power, like substation, transmission line, power distribution, smart metering, up to the highest system voltage in the country, 765 kV. So apart from that, see, we are also strengthening the team building, including our workforce. Say we have 3,500 registered vendors and the subcontractors on our kitty. So they are just one call away. Number two, that the execution strength of the Vikran, for our business size of 1,000 crore, we are approximately 800 workforce. And that design engineering is our biggest strength. 170 is alone centralized at our Thane, the corporate office.
Okay. I just want to understand, after the three segments that you have, you said water, there's railways, there's power, which is the highest margin segment for you? And will this pivot the way you're looking at the three segments?
Okay, this is a very, very good question. Actually, if somebody asks me, I will say there is a margin in all the three segments. That is individual project that gives the margin, not the segment. That opportunities are available, there are the projects available in each segment, profitability is available, but most important is that internal discipline what we are maintaining. We are selecting the project with the better margin, number one, with the proper funding arrangement and the cash flow of that particular project. This is making us the confident. So we are making margin in all the three segments.
So no, what I wanted to understand is, I was looking at your margins, FY23 at 17.5%, which has come down to 15.2% in FY25. Has it happened because of change in the mix? What is the margin outlook going forward?
I'm just correcting. The FY25, our EBITDA margin has improved out.
Okay, what is that number?
So that is 17.5%.
Okay.
So starting from the 15, then 16 and 17.5%. In fact, we are continuously improving our EBITDA margins with our continual the improvement in our execution capability, our our materials management, the improvement in our timelines, improvement in our design methodology, etc.
So it will improve from here on, 17.5, or is it the number that you'll be looking at?
Since we have already developed very robust mechanism of execution, processes, systems are very strong, internal financial control is strong, I don't find, I have no any doubt further for any reduction of the profitability henceforth.
Have you, as a company, since you mentioned water as a segment, right? Do you have any exposure to the Jal Jeevan mission? Because a lot of companies have raised concerns over the viability of these projects as well.
See, we have very limited our exposure to the Jal Jeevan mission, and then see that whatever the projects we are executing in Madhya Pradesh and some projects in Uttar Pradesh, Chhattisgarh. So since our volume is very less, the payments we are receiving but little delayed. But it is not that is the reason our complete focus, 80% is now from the power transmission and substation. And power-wise, we have a strong credential also, and that is the reason we are focusing more on the.
So are you looking to bid for any such Jal Jeevan projects?
No, we are not bid for last 1 year.
Oh, okay.
Okay. I wanted to understand and confirm whether it's right or not. Are you banned from railway projects for 2 years? Is that correct? Or what happened here?
What happened, the railway, that they were tracking one of their employee. And whomsoever come into the contract, they are suspecting our one employee. But the company is nowhere in, company is not at all involved that. And that is the reason immediately we have gone to the court and we got to stay on that.
Okay, so you're not banned from railway projects?
No, that is not banned. And the portion is just approximately 2% of our business operations. So it is not at all affecting us.
Okay.
All right, Mr. Mankitkar, thank you so much.
Thank you very much
For joining us. Wish you
Nice.
good luck for your IPO and
nice,
good to have you conversation when you have become a public company on your listing day as well as the management there of Vikran Engineering as their IPO opens for subscription today. Take a short break. More on the markets on the other side. Stay tuned. The Nifty back at that 24,800 mark. Stay tuned.
Welcome back. 24,800 on the Nifty. There was some recovery that got sold into, but again, it has been quite stable from the start of the trading session. Mid-caps underperforming. FMCG and autos batting it for the bulls, but we'll have to see which way things go. For now, we'll take your leave on this edition of Trading Hour. Thank you so much for tuning in. Halftime report is up next.